Hey guys, it's GT here, and it's time for a very important silver update with our favorite ranter, Ranting Andy. Welcome back.
It's a pleasure to be here and a great time to have this conversation.
Ranting Andy, as you guys know, is the marketing director over at Miles Franklin. Andy, thanks for joining us. I have to tell you, I am really quite shocked to see what's happened in the silver market in such a short time. Even though Bill Murphy warned us back on July 19th, big moves were coming for silver and gold in August. I'm truly shocked. I was thinking maybe we'd see 10%. I didn't think we'd see 10 and 15% in a week. I know you wrote an article called The Ultimate Quadruple Top Breakout the other day. What do you make of this? Where are we headed?
Okay, well, actually, what's really shocking to me is not what's going on today. It's that for the past year, amidst the same exact fundamental circumstances as last year, the cartel has been able to keep gold and silver down. I mean, we're talking about the reasons that were cited for gold going to an all-time high and silver going to the high 40s was because of a meltdown in Europe, was because the United States debt ceiling we went over at $14.3 trillion, and because of a weakening economy. All three of those things are not just worse now, they're dramatically worse. And on top of that, there's been a huge amount of liquidity injected to the markets by essentially every central bank on earth. So theoretically, we should be literally twice as high as we were last year, but the powers that be have stepped up the naked shorting this year. They started last September with what I call Operation PM Annihilation, which was the day after Labor Day, that was the day that the Swiss bank devalued the euro. And then there was in December they attacked again, the day that the ECB lowered rates, and then in February on the day of the LTRO2, which was the leap day violation. So they've just really stepped it up with the paper this year, and all they've done is created a massive base from which I think the current move is going to have much longer legs than last year's.
Let's talk a little bit about J.P. Morgan and this manipulation. Again, I'm a little surprised that we're having a conversation in which the way I feel like framing it is that silver has broken out and they can't contain it. J.P. Morgan's shorts, its ability to control the silver paper market is no longer, but still I'm not a fool, and I think that that's probably untrue. What constitutes this type of breakout? I mean, I know that, as you just said, governments are printing money hand over fist, and everything has gotten worse over the past year. But aren't you shocked by the scope of this move in such a short time?
Well, look, we've gone from 26 to $30, $31. So yes, it's a sharp move in a week's time. But, you know, we were at $50 last year, and then we were back up at $45. So it's really not that big of a deal. We knew it has to get up there at some point, so, you know, it moved up $5 now. We've seen it move down $6 in 15 minutes. So for it to go up $5 in a week's time doesn't really faze me. And you talk about J.P. Morgan, again, I mean, I can't emphasize enough, this has nothing to do with J.P. Morgan. J.P. Morgan is just the messenger. This is the U.S. government. When Blythe Masters was saying we were just hedging for our customer, their customer is the U.S. government. They are the U.S. government. So I don't really care about what their short position is. I don't believe any of those numbers on the COMEX anyway. I don't believe for a second that the COMEX even has the inventory and how it hasn't been taken out yet. This is all about a battle between paper and physical demand. And the physical demand always wins. The paper, there has never been more paper thrown at this market in the history of financial markets. I mean, look at the leap day violation when they found out that there were 600 million paper ounces, silver paper ounces thrown at the market in an hour's time. They've thrown the kitchen sink at this market. They haven't made a dent in it. It's only a matter of time before it has the real breakout. And I'm not talking $30. I'm talking about what you mentioned before, the ultimate quadruple top breakout. Now, I wrote that article actually in February, and what I was referring to was the $50 level for silver, because most people think in terms of, well, it went to $50 in 1980, and then it went to $50 last year before the Sunday night paper silver massacre. So when we break out of that, for good, it'll be a triple top breakout that encompassed 30 years. But the thing is, if you look back in history, and I have the chart in my piece, the price of silver was above $50, basically for centuries, and I'm talking about inflation-adjusted dollars, until we had the big silver discoveries out west in Nevada and Idaho in the 1880s. And when that happened, we had a huge supply hit the market, which lasted for decades, until, of course, investment demand and industrial demand took over and eliminated that inventory. So the way I look at it, it's going to be a quadruple top breakout that goes back to 1904, and I'm pretty sure that there's no quadruple top breakouts that encompass 100 years in the history of financial markets. And you'll understand that the $800 inflation-adjusted high for silver that goes way back centuries is going to be blown away once we go to that level.
Yeah, and I think to take that one step further, let's talk about what you write in your piece, which is the historic silver to gold ratio, which for 500 plus years was 15 to 1. And more recently, if we look at production of silver coming out of the ground, it's closer to 9 to 1, which you note in this article. The move ahead in silver could be extremely dramatic. You just mentioned it could go higher than 800. Let's talk about that ratio, and let's talk about what silver can do in the long run.
Right. Well, as you said, the ratio 15 to 1 essentially emanated from the amount of silver that was produced out of the earth per the amount of gold. It was pretty constant at around 15 or 16 to 1. But as you say, silver has now become a more rare element, at least in production. It's only coming out of the ground at a ratio of 9 to 1. But more importantly, it's now all been consumed. There is, roughly 1 billion ounces of silver left above ground. That's only about $30 billion, and as Ted Butler recently mentioned, that's only about 0.5% of the dollar value of all the gold that's above ground, and it's all being consumed. Every ounce of gold is still there, so I just conservatively say that the gold to silver ratio has to fall to at least 15 to 1, and frankly, I would be surprised if it doesn't go significantly lower. And that's why I believe that $1,000 to $4,000 silver is a no-brainer at today's dollars, and of course that target goes up with each dollar that's printed.
Well, let me ask you this, Andy. You've had your share of shills out there, people that like to make fun of those of us who are informed and really take the side of J.P. Morgan and the bad guys and somehow make the incredibly ridiculous claim that there is no manipulation in this market and that silver bugs are smoking some of the funny stuff. So let's address that, because when we see a marketplace in which a guy like John Corzine can literally say, I just have no idea what happened to the $1 billion, and nothing happens to him, and we can see J.P. Morgan being investigated by 11 state and federal agencies, and we can see the LIBOR scandal, which is just global. We can see HSBC and the drug laundering money scandal. I mean, it's just endless fraud. It's endless manipulation. What do you make of these shills? I guess at the end of the day, we'll have the last laugh when we see the market actually adjust back to the proper physical prices, which I think we're now in the process of seeing, right?
Right. Well, look, pretty much every market is overtly manipulated. It's not like it's a secret that the president's working group for capital markets manipulates stock, or that the Exchange Stabilization Fund manipulates currency and, oh, by the way, gold that's in their mandate, or that the Federal Reserve buys Treasury bonds with quantitative easing. Or, these things are all out there in public, and as you say, pretty much everything that these banks and governments have done have now become openly, these are open frauds that everyone knows about, whether it's MF Global or LIBOR or pretty much anything. So I don't really think, I put a piece out about a week ago that's called Official Manipulation, and what I was saying was that it's gotten to the point where I think the world is starting to realize that everything is manipulated. I'm starting to see some of the people you're talking about talk about manipulation as if it's just commonplace, that everyone knows about it. And of course, gold and silver is the one thing that they're very careful to not talk about, because people have been brainwashed to say otherwise. Look, the system ends, and those people's fiefdom ends when the fiat currency system goes. So even though hints of it come out of their mouths, they're very careful not to be very overt about it. Frankly, I think that the brainwashing is so powerful that they just don't even understand. They don't want to see what's right under their nose. But look, there's more proof of gold manipulation than of all the other ones combined, and that's why it makes it so easy for people like us to accumulate it.
I spoke recently with Alistair MacLeod of goldmoney.com about this September 12th deadline for the German Constitutional Court to come down with a decision on whether or not German politicians can essentially mandate that Germany, the citizens of Germany, bail out the Eurozone. At this point, it's clear that Germany, even though it was originally stated would only spend about 170 billion euro on the bailouts, at this point they've spent more than 2 trillion and are clearly on the line for spending trillions more. What do you make of what's happening in the Eurozone, what's happening in Germany? Because as we've heard Pastor Lindsey Williams warn us time and time again, when we see the euro fall, when we see the Eurozone fail, you'll have a matter of a week or two at best to make preparations because our system will fall next. The dollar will go next.
Well, look, the euro is a dead man walking. And again, we talk about official manipulation. It's becoming pretty commonplace knowledge. I think everyone pretty much knows that the euro has failed, and we can read the headlines, and some of the mainstream can say, oh, well, Holland is meeting with Merkel, and they're going to do something. They haven't done anything. I mean, frankly, even all these bailouts, the Spanish bank bailout, the European bailout, Draghi's I'm going to do whatever it takes. They haven't actually done anything with all this stuff going on. And if you read all the headlines out of Germany, one day I read today, that one guy, he's totally supporting the bailouts, and then Merkel says, no, we can't do the bailouts. This is just a bunch of Keystone cops that are just trying to buy a little time so they can prepare personally.
Thanks for watching Part 1. Don't miss Part 2, and check out my new website, thelibertymill.com. Real news, 24/7. Thanks for watching.